Hello once again. Well, according to Todd Hadley, PRD's Managing Director, each property market across Australia is currently moving at various speeds and in different directions, regardless of whether an area is located closer to a capital city or if it's in a region. Now, this is pointed out in PRD's latest Australian Economic and Property Report. Todd says, and I quote, "We're seeing different markets recording varying levels of price growth, while simultaneously in other areas prices are declining. A prime example of this can be seen in Brisbane, where property prices continue to grow, whereas in Hobart prices are shrinking." Bushy talks to the editor of the report, Dr. Asti, PRD's chief economist. That's later in the show. And then he catches up with Real Estate Institute of Australia President and CEO of the Laing Simmons Group, Leanne Pilkington. Leanne says there are too many hurdles and egos in the property industry to ever simplify home buying and selling.
So frustrating, isn't it? It makes perfect sense for us to all be, with the same regulations and the same rules and the same systems, but it's just not the way it is. And I think it's going to be a real challenge to actually make any significant progress. There are too many hurdles and too many egos in the way.
So does she have a suggestion? Well, we'll find out today. Before we start, I want to thank our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know Our Property Finance, Get Rare Property, and Apiro Marketing. You'll find us on all podcast players as The Property Hub, also on the Southern Cross Oz Stereo Network, Hot Copper, and on all social media platforms.
Property deductions can save you thousands of dollars each year. To make sure you maximise deductions, you need to work with the most experienced quantity surveyor in the country. BMT Tax Depreciation is the leading specialist in the industry. They've completed over 700,000 tax deduction schedules for residential investment and commercial properties Australia-wide. BMT guarantee to find double your fee in the first full financial year deductions. Call BMT on 1300 728 726 today for an obligation-free quote. Realty Talk and your host, Bushy Martin.
Now, during the pandemic, the petrol thrown on the fire of property pretty much artificially floated all property ships. But since then, there appears to be a steady return to the normal variations in performance between locations and property types right across the country that we've all come to know and love. So how is your property performing, and how fast, if any, is it growing, and what and where are the future property opportunities? Well, to help you uncover this, PRD has recently released its latest Australian Economic Property Report for 2024, and PRD Chief Economist Dr. Deswati Mardiasmo, or Dr. Asti, as I like to call her, joins us again to unpack the insights and implications. So welcome back to Realty Talk, Asti.
Hello. How are you?
Very good. Always good to see you, and always enjoy your insights given the clear, in-depth research you do on what's happening in the property sphere. So I guess,
thank you.
Yeah, I decided to sort of kick in, and a great report, by the way. Can you sort of start things off by just walking us through what you're seeing with Australia's property cycles and prices generally right around the country, if you could, please?
So you were right. I was listening to your introduction about now that we are returning kind of like, towards that, back to that strong property market. But right now, at the moment, we are definitely seeing different markets and different gears. So yes, we are returning back into that strong property market, but in terms of to what extent or how each place around Australia, whether it's a capital city or whether it's a regional area, like how fast they are returning back to that strong market, that's the part that is really, really interesting, because it feels like we've had two cycles in the space of 2 to 3 years, right? We have had that massive boom post-COVID, like you've said. We all went through the sort of like period of higher interest rates and cash rate hikes since mid-May 2022. And now we are trying to get back into that strong property market, but the pace in which every single market does it is different at the moment. We're seeing markets like Brisbane, Perth, Adelaide, pretty much knocking the race when it comes to median price growth. We've got Melbourne that is still trailing a little bit behind. And then we've got Hobart that is becoming more affordable for people. So basically, we do have different areas and different places doing different things.
And I've got to say that I've been in property a long time, probably as you have as well. That's exactly what I expect in property. Every area, every location, right down to the suburb level, goes through its S-curve of growth at different times and out of sync with others. So it really is a much more return to what we've seen traditionally. And that creates its own opportunities because for those that are able to interpret the data and look for the opportunity areas where they can get in where the others aren't fishing at the moment, then there's plenty of opportunity that emerges from that. I guess just in that context, if we go around the globe in terms of around the grounds from state to state, you've touched on those a little bit, but if we look at where each state is at that sort of aggregated level, can you just sort of summarise for us where each of the states are on the property clock as you see it?
Yeah, definitely. So like I said, we've got different markets in different gears. So, for example, Greater Perth and Greater Sydney, they're leading the pack, as well as Greater Brisbane. It's eclipsing Melbourne at the moment. So for them, their property clock is at around 9 or 10, which means that it is a growing market. It hasn't reached its peak yet. There's still more to come. So that's around that 9 to 10 for those certain areas. Melbourne at the moment and the rest of Victoria is either on a 7 or an 8. Which means that they're just coming out of that market recovery phase. Some places are still seeing declining growth, which is why it's at 7. But then you have also Melbourne that is at 8 because it's coming out and it's growing slightly. And then, like I said, when it comes to other places like Hobart, it is currently still at 6 and 5 if you go to regional Hobart. And that's because prices down there have become a little bit more affordable, and that creates an opportunity for first-home buyers. So as you can see, we literally have different markets in different places within the property clock. We've got some markets that are still in 5 and 6. So we have markets in 7 and 8, and then we've got markets in 9 and 10.
Yeah. Now, there's something I'd love your thoughts on, a bit of crystal balling here, which I know is always dangerous, and crystal balls have a habit of not being on the money as the dynamics involving in the economy and their property work through. But there's been a number of calls by property commentators in recent times that Perth has just about reached its peak and South Australia the same. What's your read from what the data's telling you?
So it's a little bit of both there when it comes to whether it has peaked or not. So, and the reason why I say this is because the way that we look at it is we look at the interplay between supply and demand. And we look at, from the demand perspective, we look at whether or not the buyers in that particular market are sticky, or if the buyers are, really going gung-ho and really wanting to buy property and really competitive in the market. So overall, at the moment, because of the stable cash rate, we are definitely seeing more sticky buyers. So we're seeing buyers taking their time a little bit more. We're seeing average markets in terms of sales increasing in most places. I know that in certain areas around the country, it has even doubled. So we are definitely seeing sticky buyers. And when it comes to Perth, when it comes to Adelaide, we have definitely seen a decline in the time to buy dwelling index in these areas, which means that we are seeing a much more sticky sort of like buyer market in these places. And at the same time, we're also seeing some more construction happening in these places. Like South Australia, for example, they're the ones who is knocking the ballpark when it comes to construction.
Well, leveraging on from that, Dr. Asti, I'd love to dive in a bit deeper in terms of what you're seeing as driving these locational variations in performance. You've touched on a couple of them, but can you sort of jump into that in a bit more detail for us?
For sure. So in terms of each location, like I said, it really depends on the play of customer demand and supply.
Yeah.
And when it comes to demand, we are definitely seeing that consumers are more sticky, but different places have different, this might sound a little bit weird, they have like a different stickiness to them. You know, like there are certain markets like in regional Victoria, for example, where the market is a little bit faster paced, but then you have regional Western Australia where buyers are actually much more stickier than buyers in regional Victoria. And that's because the buyers in regional Victoria knows that at the moment it's the time to get into the market because prices are still more affordable. Whereas buyers in WA know that, okay, so prices have gone up slightly, so I'm going to take my time. And so we have those differences between buyer stickiness. And right now we have a lot of governments, whether it's federal, state or local, pouring in so much money into the housing supply side of things, but then the devil is in the detail. We have states like Queensland that has a really good plan for housing supply. And then we have states like Northern Territory that has very little housing supply.
Yeah, well said. Now, one of the things that I'm seeing with data generally is that, and there's been a bit of reporting on this, that the actual listing levels in quite a few areas are well below what the long-term averages are. Is that having an influence on that stickiness that you're talking about? Because there just aren't the number of properties and therefore demand for a limited opportunity to purchase properties is driving price variations as a result. What's your thoughts on that?
That is definitely one of the factors. In a lot of places, there is less properties available, but then there's also some places where there's more and more properties are available. So in Melbourne, for example, we have seen more listings than 12 months prior. In Brisbane, we're seeing less listings. In the Gold Coast, we're seeing more listings. And so the number of listings in different areas around the country is actually quite different as well. And that does drive how sticky the buyers are, because if they see that there's less listings, then that hunter instinct, you know, of like, actually, I need to secure this now. And one of the reasons why they feel that they need to secure it now is the latest data from the RBA or the Reserve Bank of Australia is showing that there's not going to be a cash rate cut until 2025, and that there might even be a cash rate increase towards the end of 2024. And so, you know, now is definitely the time to get into the market. And so when buyers and investors know that, you know, if they know that there isn't enough listing in that particular area, that hunter instinct then comes in, and that's when they really want to compete and be able to secure the property.
Yeah, well said. Now, I'd love to turn to the PRD time to buy dwelling index that you touched on earlier. Can you talk us through what that's indicating from the research you're doing?
You know what I love about this particular index? So the time to buy a dwelling index, we work with the Melbourne Institute and the University of Melbourne with this. And when it comes to the time to buy a dwelling index, it has turned so much in the past 12 months. 12 months prior, so this is in June 2023, the common saying was that buyers are back, right? And we're seeing so many more buyers in the market. The time to buy a dwelling index was showing the graphs going up, whether it's in WA, whether it's in Queensland or Victoria, everyone was wanting to buy in. Whereas now, 12 months later, the time to buy a dwelling index is actually showing that most states are recording a declining trend. And that really goes well. It pairs well with that consumer sentiment that is a little bit lower at the moment at about 85%. It should be around 90, 100%. But at the moment it's about 85. And so you've got cautious consumers and you've got sticky buyers. So there's been a massive change in that time to buy a dwelling index, even just in the past 12 months. And believe it or not, out of all of the states, only Tasmania have gone above the 100 index points, which means a very positive consumer sentiment base. So they're the ones that are going gangbusters, so to speak, going gung-ho, wanting to be in the market, wanting to be super active in the market. And they're the only one that is above 100 index points. Whereas a lot of the other states are showing a decline in their time to buy a dwelling index.
Which is interesting because prices are actually falling in Tasmania. So there's almost an inverse correlation between price variations and the index in terms of the time to buy. So that's quite interesting. Love you sharing that. Again, pulling out the old crystal ball, Dr. Asti, what can we expect for the rest of 2024 and early 2025 and beyond in light of your traffic light indicators and other potential influences that your research has uncovered?
You know what's really interesting about doing a crystal ball, because previously I've been able to kind of glean from the report, like you said, using the traffic light where we're heading. Because out of all the indicators, whether it's property prices, rental prices, consumer sentiment, time to buy dwelling index, every single indicator in there, in the past two versions, so that's 2023 and 2022, have all had like a major traffic light color, whether it's orange or whether it's red, where is this, or whether it's green. But this time around in 2024, it's a really mixed bag. I've got some indicators that are on green, and then like housing finance, for example, residential construction is another one. I still have quite a lot that are on yellow or on orange. And then you've got the time to buy a dwelling index, which is on red. And so, it's a very sort of like traffic colorful report at the moment. And the only thing that I can say when it comes to crystal balling is that if we look at what is happening in terms of the cash rate and the RBA's predictions on the cash rate and also inflation rate, it has really changed a lot in the 3 months that they have, or the 3 times this year that they have published their statement of monetary policy. And when I say that, back in February, they were still thinking that inflation rate will keep on going down, 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 and there's a possibility of a cash rate cut towards the end of 2024. In May, that all changed to a more stable inflation rate and then a more stable cash rate throughout the whole of 2024 and 2025, and not a cash rate cut until 2025 or mid-2025.
Yeah.
In August, and this just literally came out, I think around the 7th or 8th of August, their inflation rate prediction have changed again. Back in May, it was stable. And now that there might be fluctuations and slight bumps in inflation rate and even a higher inflation rate towards 2024 and early 2025. And so their cash rate prediction have changed again to possibly a cash rate increase towards the end of 2024, or a cash rate cut at the beginning of 2025, depending how inflation rates go. And so trying to crystal ball at the moment is actually, almost impossible, because every 3 months, it seems that the prediction for inflation rate and cash rate just keeps on changing. And so it really does depend on your local market and what's happening in the local market, and also your own financial situation. Because regardless of whether, the cash rate is at 4.35, which is what it is at the moment, or if it goes up by 25 basis points, or if it goes down by 25 basis points, if your financial situation doesn't allow you to be a purchaser in the market, then you won't be a purchaser in the market.
Very well said. And I think what that highlights is a couple of things. One, that the economy and property has always been extremely dynamic, and conditions vary in terms of time, in terms of location. I've often said that there's more moving parts in the property dynamics than there are combinations on a Rubik's Cube, Dr. Asti.
Yes.
So that
Actually right.
And I guess the good part of that, though, is change means opportunity. So for the savvy property purchasers and buyers who are able to interpret the data and identify the opportunities that are going to perform regardless of the sort of seasonal variations that occur, and the growth drivers are supporting what's going to happen, then there's always opportunity if you know where to look and what to buy. So love your insights on that. I'd really appreciate you bringing us up to speed with these very informative property insights, as always, Dr. Asti, which really does clearly reinforce those dynamics and the opportunities that are before us, and the need to be borderless and long-term property approach, which I think is the underlying message. So I really want to thank you for all of this and joining us on the show again today.
Thank you so much for having me. Always a pleasure to talk property with you, Bushy.
Thank you, Dr. Asti.
Successful property investment is a game of finance. Do you have the right team and the right game plan? Realty Talk is brought to you by Know How Property. More than mortgage brokers, Bushy Martin and his team of investment architects set you up with a sustainable strategy structured to lower your costs, tax, risk and stress while increasing your capacity for growth. Know How has helped over 1,900 homeowners and investors secure more than $800 million in property wealth. So get set to live more, work less, and live your legacy. Want to know how to invest in your freedom? Visit knowhowproperty.com.au.
This is Realty Talk, powered by realty.com.au.
Now, property and real estate is Australia's biggest asset class. And depending on who you talk to, there's somewhere between 10.9 to 12 million residential properties in Australia, worth around $10.4 trillion at last count, which completely dwarfs the total asset values of both shares and superannuation by about 3.5 times. So with around 130,000 Australians employed in the real estate industry, helping something like 6.9 million Australians into new homes and rentals every year, that also contributes around 13% of our gross domestic product. As technology continues to dissolve the friction and pain points in the industry, why does it actually feel like things keep getting harder instead of easier? And what does the future of the Australian property industry look like? Well, to explore this, we're joined by the President of the Real Estate Institute of Australia, Leanne Pilkington, one of the industry's most respected and sought-after commentators, who's been an active thought leader in the industry for almost 3 decades, and is also the CEO of boutique real estate group, Laing Simmons. So welcome to Realty Talk, Leanne.
Hey, thanks so much for having me. I appreciate it.
Been looking forward to having a chat. What I love about the work you do, you're sort of in the weeds at the boutique agency level, but also have a very good holistic overview at the national level, given your role as the president of the Real Estate Institute of Australia. So I guess given that full breadth and to set the tone, wearing that Real Estate Institute hat, what are some of the biggest issues and challenges that you see facing the real estate industry across Australia at the moment?
Yeah, there are lots. I mean, we went through a period of obviously really high growth during COVID, and it was the first time in my career that I can remember every market seemed to be travelling at the same speed. We're certainly not in that space now. We've got markets like South Australia and Western Australia that are really, really strong. We have got investors exiting in droves out of places like Victoria and New South Wales, heading towards those other states for a variety of reasons. But it's it's a very interesting time. And then when you put on top of that, you've got changes to legislation. We've got the anti-money laundering. We've got know your customer. We've got privacy coming in, or changes to privacy coming in. So there's just a lot of different things happening all at once.
Yeah, I guess that's the interesting challenge and opportunity of property, because of so many dynamics and constant changes in terms of location, property type, and all the rest of it. But I guess as technology continues to shrink the tyranny of distance that's always sort of classified Australia, and property transactions are now shifting from sort of the backyard local to a borderless national approach, what are the Real Estate Institute's views on creating or improving nationwide consistency in practices and process, particularly in the face of our age-old state-based legislation silos?
So frustrating, isn't it? It makes perfect sense for us to all be, with the same regulations and the same rules and the same systems, but it's just not the way it is. And I think it's going to be a real challenge to actually make any significant progress. There are too many hurdles and too many egos in the way.
And probably too many entrenched systems that got such a momentum that they become golden handcuffs, I guess, in one sense.
Yeah, it's very true, right? Sometimes we're all so deep in the weeds of getting the job done that we don't take a bigger view, and we don't do the work that we need to do for a long-term improvement in the future. We're just sort of busy doing our job today.
Very good call. Now, there's been sort of massive growth in the buyer's agents industry in recent times. What's your read on the growth and impact of this on the industry?
Well, firstly, I think it makes perfect sense for there to be more buyer's agents around. I think selling agents are representing the needs of the vendor, of the homeowner, and it makes sense for somebody to be negotiating on behalf of the buyers. So, yeah, I'm very supportive of buyer's agents. I think, though, there's a lot of failed selling agents that think being a buyer's agent is an easier road, and it's in fact not. Buyer's agents have very different skills in a lot of instances, and they are selling across the country, or buying, more correctly, across the country. So, the way that they analyse the purchases and, decide on the pricing, it's a lot more technical than a selling agent who's typically focused in one demographic or geographic location.
Yeah, I totally agree. And I guess I think the challenge for the industry, it's like any new burgeoning industry, the hurdles to access are pretty low at the moment. And I guess there's a wide variety of skills that are being expressed in the buyer's agent sphere, from pretty damn average to exceptional, which I guess...
Yeah, some of them are absolutely fantastic, but not all of them are. And so, yes, they need to be licensed real estate agents, but my view is that they need to have some specialised modules in their licensing. They typically don't need trust accounts, for example. So is it essential that they have that training? I'm not convinced that it is, but there's a lot of other stuff that they should be learning. And some of the, independent buyers agents courses are not necessarily to be recommended, can I say?
That very nicely said. I think I've jokingly said in the past, Leanne, that it's like cutting the coupon off a cornflakes packet with some of the courses that I've seen around there, and about as useful too, by the way.
And some of the things that they're being taught really, bother me a lot. But yeah,
yes, I guess while I think at times we're over compliant in this country, in instances like this where there are very low barriers to entry.
Yeah, and unfortunately, markets and businesses move so quickly and the government can't always keep up with the changes. So to anybody who's looking to employ a buyer's agent, I would definitely do my research, and I would be getting recommendations from people that have used that buyer's agent before, looking at case studies and all that sort of stuff. I think it's really important to do your research.
I totally agree. Now, I guess on the subject of compliance, going from probably under-compliant to but potentially over-compliant in some areas, I'd love your thoughts on the sort of rippling waves of rental reforms that we're seeing in moving from state to state around the country, particularly in relation to concerns around no grounds eviction and some of the other issues that are arising. But what's your read on all of that?
Well, the more the government play with these regulations, the less attractive investment becomes for property investors. And so we've got to be so careful. We're in the middle of a housing crisis. We need our private investors. It should not be up to mum and dad investors, and I'm one of them, to be providing housing for the country. But it is. Right? The government is not playing their part, unfortunately, even though every government around the country, we're in election cycles everywhere. Every single government has recognised housing affordability, lack of housing supply as critical issues. It doesn't matter where we are, yet nothing is being done to remedy this in the short term. They've got long-term lovely plans that their targets they're not meeting. So I certainly wouldn't let my team continually set KPIs that they have no hope in achieving, but that's what we allow from our government, unfortunately.
Sadly, we've got political horizons that are only a few years, and therefore the long-term stuff doesn't really matter.
That's the problem, right? Yeah,
Yes.
I know. It's very difficult.
And I think the other thing there too, Leanne, is that we're in a situation where the very people, the mums and dads that you just mentioned, that are predominantly the providers of rental housing stock in particular in this country, are being victimised as the donkey to pin the tail on, rather than embracing them, incentivising them with the opportunity to expand the provision. What's your thoughts on all of that?
Oh, look, I totally agree. And you've got to be really careful when you come out and say you need to incentivise investment because, you're a real estate agent and that just looks bad, right? But the reality is, for example, first home buyers. It's really hard to buy your first home. But what about the first home buyer incentives? Why not have them for first home buyers, whether they're owner occupiers or investors? There's plenty of baby boomer parents that would help their 20-something-year-old kids buy their first property while still living at home with mum and dad. So why not access that? We need those people to get into the home market. We need the investment stock for our renters. So where's the harm in it other than a government who doesn't want to be seen to be incentivising investment?
Yes, spot on there. Now, it's something that's a bit closer to home for you and probably something near and dear to your heart. The Real Estate Institute of New South Wales has recently appointed an AI bot boarded by Alice Ng.
I know.
Yeah, I'd love your thoughts on this and what impact do you see this and other prop tech innovations having on the future of real estate industry moving forward?
It's I was really pleased to see that Tim McGibbon, the CEO at REINSW, went down that road. He's very excited about technology. And the thing that I would say, I remember back in 1997, before realestate.com was a thing, I presented to a group of our business owners on the internet, and I was told afterwards, "Oh, Leanne, that's a lot of fun, but it's just a fad." And of course, we know that it wasn't just a fad. It has changed everything. And I believe that AI will do exactly the same. So for those of you who are avoiding AI, get in and play with it. You'd be surprised at what it can actually do. We've just built, for example, at Laing Simmons, we've just built a series of GPTs that will answer questions for our property managers. So it's got access to all of the NCAT rulings. It's got all of the legislation. So you can just ask it a question like you would your manager, and it will give you all the information you need. There's so much we can do with it. We shouldn't be afraid of it. We just need to get in and play, and we'll be surprised at what it can do.
Absolutely. I think the opportunity to improve the efficiency and the effectiveness of the industry and take up some of those very laborious tasks that free up time to put into high value service opportunities.
Like relationships, right?
Spot on. And better communication at all levels. So look, we've only just scratched the surface, but I really want to thank you for your very insightful words of wisdom and optimism on the future of the Australian property industry, and for taking the time out of your very busy schedule to share this with us on the show today. So thanks, Leanne.
Absolute pleasure.
Finding the perfect investment property shouldn't be stressful. At realty.com.au, we connect you with expert buyer's agents who do all the hard work for you. Whether you're buying your first property or adding to your portfolio, our trusted buyer's agents will guide you every step of the way. Realty.com.au, your gateway to the investment property of your dreams. Find your perfect buyer's agent today. Visit realty.com.au now to get started.
Unlock bonus content now as a premium subscriber.
Well, that's it for this week. Make sure you join us for more property news each week with Realty Talk and get invested. You can do that by subscribing to The Property Hub on all podcast players. Join the conversation on Facebook too. Just search The Property Hub Collective and give us a like and follow. Thanks to our supporters and content partners, realty.com.au, BMT Tax Depreciation, Know How Property Finance, Get Rare Property, and Apiro Marketing. Until next week, all the best.